Privileged to introduce you all to our guest of honor, Shri Nilesh Sathe, former member Life, Insurance Regulatory and Development Authority of India, and former CEO of LIC Mutual Fund. Sathe sir's professional journey began with distinguished roles at Bank of India and Canara Bank, accumulating over 6 years of experience in the banking sector and about 28 years of experience with LIC of India. He is an independent director for Mahindra, Bajaj Alliance, Tata AIA, PB Fintech. He also acts as a financial consultant for Bajaj Finserv, Astute Corporate Services, National Highway Authority of India. He is currently also senior advisor for Cyril Amarchand Mangaldas Mumbai Solicitors. Sir has also authored a book titled Never Give Up, and currently he is a columnist for Lok Satta, Sakal, and Vivek Weekly. Please give a huge round of applause to our guest of honor, Shri Nilesh Sathe sir.
Before Mr. Nilesh Sathe comes, I will just take a minute. And just don't get panic, I'm not going to talk on insurance. It's not my forte. But what I know that when you talk about insurance and reinsurance, it's always the person who does that. It's considered one of the hardest sell, among all the products and services. To sell insurance and reinsurance is a very tough job. And the person behind it, one who's successful in that line, has to be very positive, very optimistic. And today I'm happy that one of our the keynote speaker is an epitome of positivity and optimism. He has survived a fatal cancer not only once, twice, but thrice. And still he looks as fit and as enthusiastic. Amazing. Not only that, he has also ensured that the healthcare is good for available for others too. So has made a very generous, rather I should say, he has paid a very generous premium. Normally in insurance, they are only used to collect the premium. But Nilesh has given a very generous premium. He has donated 1 CR from his personal kitty to a cancer hospital in Nagpur. Mr. Nilesh Sathe, please.
Thanks, Ravi, for generous introduction and a couple of things which, honestly, let me tell you, when somebody introduces me, I want and I like it to be shared with others that I am a cancer survivor 3 times. For the reason that even today, anybody who comes to know that somebody has got a cancer has shivers. Because it's such a dreadful disease. But then, due to improvement in medical science, it's not so dreadful today. And I want to showcase myself to others so that they gain confidence that here is a person who has been operated of cancer thrice, from 2012 to 2014, and even after 19 years, he is still alive, not just alive, he is enthusiastically sharing his views with us. So this message should percolate, that do not get afraid of cancer, get it treated quickly, follow all protocols, and lead your life in the best way that you can, in a positive manner. And human body is such that, it's amazing. Internally, it fights everything that happens to you. So believe in yourself. So thank you, Ravi. Ravi is my schoolmate, incidentally. Thank you, Ravi, for giving me this opportunity. To start with, Mr. Atul Shirodkar, the president of MEDC, Ravi Boratkar, Mr. Sumit Bohra, Mr. Tarun Agrawal, Anand Kulkarni, and Anil Pawar, my former colleagues, esteemed panelists who have come here, students, faculty members, ladies and gentlemen. First of all, let me compliment MEDC for holding this seminar, which is on insurance and reinsurance subject. And the response that MEDC has received is stupendous. The hall is overcrowded, it is overflowing rather, and that indicates the importance of the subject. As an insurance person, let me tell you a couple of things which over a period of time have emerged. It was in the pre-independence era that there were 245 insurance companies operating in India. Just imagine what was the population that time, and 245 insurance companies were operating in India. Majority of them were not making profits, they were in losses. Majority of them were not paying any bonus to the policyholders. They were in such a bad shape that any time they would have closed. They were like a family affair. And knowing it fully well, the visionary C.D. Deshmukh, who was the finance minister that time, he decided to nationalize the insurance sector. The purpose was, if the insurance companies fail, faith of public or the trust of public in insurance will fail. That should not happen. Insurance money is for a long term, and if at all such a situation arises that the insurance companies are failing, then nobody will come forward to insure himself. With that view in mind, the great economist and the visionary C.D. Deshmukh, he nationalized all the insurance companies together and formed Life Insurance Corporation of India with a mission to spread insurance to the nooks and corners of the country. They did it well. The money was protected. Government gave guarantee to the money which was paid to LIC as premium or to the earlier insurance companies' premiums which were merged with LIC. That also helped, as a result of which, till 1990, insurance business developed. We know that even at a small place, there will be an insurance agent. But that was not enough, especially with the LPG as is commonly known, liberalization, privatization and globalization. It was necessary that the sector should develop in leaps and bounds, as a result of which it was decided that the sector will be opened for private sector also, and as a result of which today almost 60-70 insurance companies are operating in India, but definitely not 245. Still 70 insurance companies are there, but again they also should double. In a small country like Nepal, there are more insurance companies than in India. In England, there are 3 times insurance companies that are operating in India. So it is not that there is no scope. There is scope. But then IRDA thought, what can be the reasons for not many companies coming forward to start insurance business? And the major one, hurdle, which was thought was capital. Insurance is a very capital intensive industry. And surprisingly, the more business you do, the more capital you need. I remember when I was in IRDA, there was one company which was not doing so well. CEO came to me and said, "Sir, what to do? My promoters have said you don't do more business because then we will have to pump in more capital and we don't have capital now." Just imagine, because if you are doing more business, you need more capital. And if you don't have more capital, you cannot do more business. So what IRDA thought? IRDA thought that, can we do something different? Can we have insurance company license for doing either regional business in that region itself or line of business? You know, in insurance, there is life insurance, there is health insurance, there is motor insurance, engineering, marine, fire. These are all lines of businesses, health. So if somebody wants to do only motor insurance, he may not need so much of capital because it doesn't have a long tail. Long tail is a technical word, but it means that the liability will close in a year or two. Accident happens, claim is paid, job is done. If you have got a longer tail like life insurance, where policies, contracts are for 15, 20 years, or sometimes even for life, there are whole life policies. Money will be paid only on death or attaining 100 years of age. So this is a long tail. Obviously more capital will be required. But for businesses which are of short tail, like take example, suppose somebody wants to do business only in Kerala, small state. There are companies like Manappuram or Muthoot Finance, These are all region-centric companies. Suppose they want to do this business and they say that we don't want to spread all our branches all over India and all that. We want to do only in Kerala. Will they need so much of capital? Answer is no. Because what happens in developing economy, capital is always scarce. Capital is shortage. And putting in more capital is very difficult. So if some such innovative, out-of-the-box things can be thought of, then there will be more scope, and accordingly, IRDA has worked it out, and the Insurance Act is likely to be amended. Maybe in the next session it will get amended, where all these changes will happen. The second is usage of technology in insurance. I remember I had read it in one of the books of insurance long time back. It was written by one Mr. S.M. Shirodkar. You must be remembering. He said that I was a branch manager in a rural branch in LIC. And one day, I have found people carrying a dead body to my office. Before taking it for funeral, they had brought the dead body to LIC office. And all came inside. I said, why? What happened? Why you have come? Then he said, no, actually the gentleman who has died was having LIC policy. And in order that you should ascertain that he is really dead, we have brought his dead body to you. Why this thinking must be there? Because there used to be something called cattle insurance, where the sheep and the goats and the cows and bullocks, they used to be insured. And it was one of the conditions that a proof is required that the same cow or the bullock has died. So there used to be tagging on the ear. They used to tag. So, and photograph and all that was not there at that time. So the fellow used to be called to check whether the tag is correct or not and then settle the claim. So they thought that probably when man has died, that also may be a requirement of insurance company to ascertain that he has really died. But then over a period of time, the days have changed. It has changed to such an extent now that if a car meets with an accident, through artificial intelligence, by taking 8 photographs, there are insurance companies which are straightway settling a claim. From different angles, you take photograph, put it on WhatsApp, send it to the company. Company will evaluate a claim and inform you within half an hour that a claim for 30,000, 50,000 will be settled. If you are happy, go ahead. Otherwise, go through the process. Now it has come to such an extent. You don't need a surveyor for finding what is the amount of loss. Over a period of time, these changes have happened. The major change that has happened is on health insurance. You may be surprised. There are 50 crore persons who are insured, either through individual health insurance policy, or through group insurance policy, group health insurance policy, or through the policy initiated by the government, which you may be aware of, PM Arogya Bima Yojana. Through all these policies, there are 50 crore, means 50% of the population, or at least 30% of the population is insured. Now, where was health insurance a couple of years ago? Just 20 years ago, the total Mediclaim policies, because there was only Mediclaim policy those days, were not even in crore. See the leaps and bounds in insurance. Still there is abundant scope. Even today, 2/3 of the claims of hospital, means of the hospital bills, are paid from pocket. Only 1/3 are paid through insurance. There are something called wearable devices. You might have heard about it. Wear a Apple Watch and it will record everything relating to your health. How much exercise you have done today, how many steps you have done, how many stairs you have moved. Everything is available there. Now, if you are allowing insurance companies to connect it to the insurance company's IT infra, they will come to know that you are a perfect fit person, waking up at what time, going for a walk, jogging, gym, this and that. Why should I charge you the same amount of premium as I am charging to somebody else whose details are not with me? So, premium used to be charged on level basis. Everybody is same. But it is not so. My driving skills are different. My car is different. My way of driving is different. Like, I will give you an example. There are two cars. One is always in a garage. He only goes to office and comes back. Office is only 5 kilometers. Another car, which moves all around throughout the day. Wife drives the car, son drives the car, everybody drives the car. Whether premium should be same for both the cars? No. But how do we come to know that it should not be same? For that, now insurance companies are charging premium based on your declarations. I will drive maximum 10,000 kilometers in a year, my car. Premium will be charged based on that. My car is always in garage. Now, when car is in garage and the house is also insured, if something happens to the house, it will happen to car also. Why charge double premium? Premium for car also and premium for house also. So insurance companies have changed their approach and attitude. This is what is called as underwriting. Proper underwriting. Actually, underwriting a risk is very important. And if you underwrite proper risk, then your results also match with your estimates. This is important. Again, on health insurance, people were afraid that if I am diabetic and if I disclose that I am diabetic, insurance company will not give me health insurance. But friends, insurance is a contract based on utmost good faith. The client should disclose his financial position, his health position, and everything. Insurance company will assess the risk and quote the premium. If something is not disclosed and later on at the time of claim, insurance company comes to know about it, then you are in trouble. What for you have taken insurance? That in case of difficulty, I should have my claim settled. So, utmost honesty from customer's point of view is also required, and there is nothing to fear. Now, health insurance is also given to people who have got heart attack, who have got diabetes, who have got cancer. There is some waiting period. What does waiting period means? Means for 4 years after taking the policy, if you keep renewing, and subsequently, even because of the disclosures that you have made, like diabetes or heart or hypertension or whatever it is, you have to get admitted to hospital, the claim will be settled. No questions asked. This is what is called waiting period. So those days have gone. There is no need to hide anything from the insurer. It is better to disclose everything so that proper risk is assessed. And many times, even today, I came across one of my friends who is now nearing 65. One day he came to me and said, Nilesh, I am really sorry. For the last 10 years, I have been paying premium for health insurance and nothing has happened to me. I have lost entire money. Whatever sum assured I have paid my premium for during last 10-15 years. And I have not taken a single rupee claim. So I want to stop paying premium now. So I told him, Satish, on the contrary, whether you did not claim is a matter of rejoice or grief. It is actually a matter of rejoice that I did not fall sick. I did not get admitted. This is a matter of rejoice. But you are feeling that it is a matter of grief. It's unfortunate. And moreover, if you stop now, is there any guarantee that tomorrow you may not need it? Statistically, it is worked out that whatever amount of money a person spends on his medical treatment throughout his life, 80% of the same is spent 2 years before his death, within the last 2 years of his death. Nobody knows when somebody is going to die. So stopping premium at some point of time, saying that I did not claim anything, is futile, is insane. Moreover, for senior citizens like us, beyond 70, if somebody even wants to take health insurance, no insurance company will give you health insurance. But if you continue your policy from 50, 60, then 65, 70, nobody can refuse renewal of insurance premium, insurance policy till death. Now see what a great advantage it is. Nobody can refuse. So these are the things which are important. The panel discussion is going to be there on penetration, so I will not dwell upon that in the inaugural speech. But you'll be surprised to know that the penetration in India has crossed the penetration in UK. We'll deal with it when we go to the subject in detail. General insurance penetration has crossed 1%, life insurance has crossed 3%. But still there is much more scope. And I'm sure with more and more awareness, financial literacy growing, the importance of insurance being understood by people, the uncertainties of life being understood by young generation, the insurance penetration will increase manyfold. Again, at the end of the talk, let me thank MEDC for holding this conference. And I'm sure each one of us sitting here will be benefited because of the panelists and the panel discussions. The subjects which are chosen are also very relevant. And I wish this conference a grand success. Thank you very much.